Good evening, viewers. Welcome to episode 33 of COVIDCASTJA. We're happy to be here with you again this week. And today we're going to be talking about managing your inventory this Christmas. But let me ask you this question first. Have you received our weekly memo? If you haven't, if you're not on our mailing list, email us at psoj. I have it wrong. It's sme@psoj.org. One would think that saying that every week I would have memorized it by now. So email us at sme@psoj.org. You can also visit our website, smallbusinessportal.com, which just provides a wealth of information. Please navigate the site and we really welcome your feedback. Nevada Powell, lead architect of the PSOJ AFFP project, is with us again this week. Nevada is see me in my red.
Yes.
Because I'm trying to be positive, notwithstanding COVID. And we thought this was a very important time. We're at November 19th. This is a very important time for us to start talking about Christmas inventory. Hi, Sandra. We're so happy to have you again this week. Sandra is always here with us. Max North, happy to have you again this evening. So we're talking about managing your inventory this Christmas. And those of us who have been in business for several years, the Christmas period has been treated differently over the years. I don't even think Gilbert had this kind of effect that COVID has had. Very unprecedented times, but also just the unpredictability of the time. So you're really not sure what's going to be happening around Christmas. So a lot of our retailers are struggling with how do I manage my inventory? Worse too, if you wasn't managing it so good from before.
So good before, yes. And you have to be much tighter. Much tighter.
So
Rochelle, yes, go ahead.
What are your initial thoughts about today's episode? Because I know this is a topic that's very near and dear to you.
Very, very dear. Because it's one of those things that, again, remember, we always talk about how much visibility do you have into your business? How much can you see? So again, I won't call any name, but there are a couple of stories I wanted to share, which is a classic example of inventory systems gone bad. Today I was in a pharmacy, quite well-known pharmacy, not somebody who's been on the program. And I made a request for something. And the person went around the back about 20 minutes trying to find if they have it. This is an inventory system that is broken or is not working. Because the fact that I had to wait 20 minutes and the fact that they wasted time not doing whatever else they need to do to go around the back. And secondly, the fact that they then didn't have it, which means it was then out of stock, or in theory, because they also could have missed where somebody put it inside the storeroom. Who knows, right? So you have a situation now where you say, boy, there is a lost sale and there is an unpleasant customer service experience, right? That's an inventory issue that's reflecting out through the business. Another example, a consultant who I have done some work with went to look at a big manufacturer in Jamaica recently, and he sent me a picture of the warehouse. And Rochelle, it was quite shocking. It's a warehouse with hundreds of thousands of items, for sure. And a whole heap of little things. But things on the floor, things halfway on this shelf, halfway on the other shelf. Chaka. Guaranteed, there's probably a lot of dead stock, a lot of things that they cannot find, a lot of loss, a lot of rebuying of stuff that they already have. So all of that is cost and stuff that is things. So what is inventory management? Let me tell you what inventory management is. Inventory management tracks your goods through the company's supply chain, from your purchasing to your production to your sales, right? It's tracking where the inventory is in the supply chain, in the ecosystem, in the business ecosystem. The desire of it, or the purpose of it, is to ensure you got the right stock, the right SKU, stock keeping unit, at the right level, whether it's 10 or 100 you should have, given what the business needs are, in the right place, so you know exactly where it is. You know, dig up and where it is at the right time, because you need to find it when the customer is there and all that other stuff, as well as right cost and right price. Because remember, sometimes you buy some inventory, you buy something and it come in, it's a year ago you buy it and it was at relatively lower price than something you bought 2 weeks ago. So therefore, you also need to be tracking what you paid for the things, because there's some things you need to get rid of actually quite quickly. So again, inventory management tracks goods through the supply chain, from purchasing through production and sales. Now, There are basically 5 types of inventory. There's the raw material, if you're a manufacturer. So you're buying leather that you're going to convert into shoes, let's just say. So there's raw material inventory. There's what you call work in progress, which means you've started to transform the leather into a shoe, but it don't quite become a shoe yet. So, you know, you do the sewing and you do the button, but you don't put the belt, the zipper on the shoe or the heel on the shoe, etc. So it's work in progress. That's the second kind of inventory. The third kind of inventory is what we call finished goods. That's the thing that when your shoe is ready and ready for go on your foot and you buy it, or customers come and buy, that's finished goods, right? Raw material, work in progress, and finished goods. Those are the 3 main ones. In addition, 2 other pieces, there's what you call maintenance, repair, and overhaul, MRO. Suppose somebody did return some shoes that did kind of bust up. It's not technically finished goods because you have to go fix it, but you still have to be tracking that, right? So you have a thing called MRO, where it's things that you have to fix and maintain and all that kind of thing in the system. And last is packaging. What is it that the shoes go out in? Is it in boxes? Is it in bags? Is it plastic? So you need to keep track that, you know, we sell X number of shoes a day. Therefore, we need, you know, X number of boxes. Raw material, work in progress, finished goods, maintenance, MRO, maintenance, repair, and overhaul, and packaging. 5 types of inventory.
Okay, so Nevada, hearing Nevada on this particular topic. So Nevada has gone through the 5 types of inventories. Raw material, work in progress, the finished goods, MRO, that's maintenance and repair, and packaging. So this is now taking us through what inventory management would look like for a manufacturer. Tonight, we're also going to be joined by Cordell Mullings, who is Chief Executive Officer of Attention to Detail Company Limited. And he's also going to be giving us from the perspective of a consultant, an inventory management consultant. Nevada, glad to have you back.
Sorry about that. I don't know what happened. Yes, yes. So,
Nevada, before you go on, the inventory that you would have taken us through, this is the usual 5 types of inventory for a classic manufacturing company. So that, or retailers who buy finished goods, so who actually start at number 3, the finished goods, can you tweak that for us so that they are...
In that case, I was just saying, I don't make the shoes, I buy the shoes and then resell them, right? So what I do is by cost of goods sold. So the shoes that I've bought, which are finished goods, and then there are shoes that I have in the warehouse and shoes that I have on the shelf, right? So in that situation now, there's no manufacturing and no. I could have, by the way, shoes returned that I need to do like a repair on the back. That could happen. But for the most part, we're talking about finished goods from the manufacturer or whoever I buy from. That I'm going to keep track of how much I bought it for and how much I'm selling it for. That's really the difference. But the reason I started with the manufacturing is the manufacturing have more types of inventory. If you just buy and sell retail, you have basic inventory.
So Nevada, you would have started out with us, you know, you told us a couple of stories, and I think you made a very important point too, that inventory management is not just, you know, we just think about it, stock taking, closed for stock taking, and we count up the things and then we just count them up and we're done. Inventory management, I know you're going to be talking us through why manage your inventory closely. And while you're doing that, I think it is also important to reinforce that inventory management is so closely linked to the customer experience. Because when you are able to tell your customer whether or not you have the good, when you can make the orders based on even how you know your stock units are kept, that's a whole different level of how you're able to manage. And as we're talking through, we recognize that a lot of these principles are a little different in this COVID period and as we approach Christmas. And I know you're going to touch on that for our viewers. So why we do this inventory so closely? Make me talk about that.
All right. I have a slide. I'll tell you if you're breaking. Okay. So why are we managing inventory so closely? The first thing is visibility into what's in stock and where it is and how it's moving. So the what's in stock is the SKU, the shoe, right? Red shoes from Prada or whatever it is, right? That's what's in stock. Where you have it. Is it in the warehouse?
Red bottom.
Exactly, because that we love, right? Where we have it could be in the storeroom or on the shelf. And how is it moving? We sell 5 of these a week, and you know, so you have a sense of what it is, and that's the tracking. So the first thing is it creates that visibility into your business. It minimizes the cash tied up in inventory, because what happens when you're not tracking? Again, the same place that I went today that didn't know if they had the thing in stock. They may have had this thing in stock and then they went and reordered it. So more money gets tied up in the inventory versus had they known, you know exactly you need 3 or 10 or 100 in your stock. You don't overbuy. You don't overspend because you know exactly how much you have. You can do better sales forecasting to understand that if I sell 5 of these a week and it takes me X amount of time for it to get delivered, what that means is that I need to order enough of a month's supply, let's say, to ensure that I always have the inventory that I need. And then in addition, the sales concentration, you're able to see which types of inventory are moving quickly and which types of inventory are moving slowly. And therefore, you can also buy accordingly. Next is avoid stock out or lost sales. Remember, if somebody comes to your store and said, do you have this? And you don't have it, they'll go somewhere else. So this is actually a lost sale, lost revenue, which you want to avoid. Minimize dead stock. Boy, sometimes you go into some of the pharmacies and you see some toy things with all the box breaking down, which means that has been there from last Christmas or the Christmas before. You want to minimize that, get that out of the system, sell it, discount it, and make sure your thing keep looking fresh, because not only are you losing money, you're taking up valuable real estate space, and in fact, everything deteriorates, right? Worse if you have things that actively deteriorate. You want to minimize theft, unless you know what's there.
Before you go on, because we've dealt with the first 5.
Yes.
In terms of, I just want you to bring it back to this COVID time, because a lot of our retailers especially are still struggling with how do you tie this in to some days you're closing earlier, some days you're closing later. How are you managing this process during COVID? So for example, dead stock. What if you do with dead stock? Throw it away, or you have a sale outside?
Okay. Ideally, you want some kind of sale. Ideally, you want to put some kind of promotion to see if you can move it. But here's the thing. If you can't move it, give it to charity, throw it away, whatever. Remember, it's taking up space beyond it's just being there. So stop. It's about also releasing it, letting it go. So you have a situation, for example, for Christmas, and there's a bunch of stuff you had left over from last Christmas, right? You want a deep discount with those, maybe a day, 2 days, 3 days. We're saying all of this is going 50% off, 60% off, etc. Remember, when you get people to come in, you also have an opportunity to sell other things that they may not be doing. So you discount it so far that somebody said, boy, you know what? Let me go get that. While I'm there, it's very likely I'm going to see other things that I need. So use the dead stock even as a potential selling item to attract people to the store.
Okay, I like that point a lot, because sometimes we don't recognize too that sometimes the sales attract us, that when we go and we hear 60% off, all of a sudden we're willing to go inside and buy some other things at the 100% cost.
Yes, absolutely. Absolutely.
So
then there's an issue. Yeah, man. Back to the list now. There's an issue of theft, which you have to be careful of. And again, you're less likely to be stolen from. Slide. Until back. Sorry.
Yes.
To watch the theft, to minimize the theft that's happening. Then you need tighter management of working capital overall. Again, working capital, as we've talked about many times on this show, is the oxygen of the business. It's the money that you require to actually run the business, that pays the sales, inventory, etc. By reducing the amount of inventory in your system, you actually reduce your working capital. And it also saves time and great efficiency. Nobody now run up and down in a warehouse to try to find something to see if it's there. It's already on a system and they would know. All of this leads to great efficiency and more profitability overall.
Okay. So Nevada.
Yes.
In previous shows, we had talked about our financial statements, understanding the accounting for our business. I just want to draw us back to, because we're talking about working capital here. Inventory management. Can you talk to us about how that affects bottom line? Good inventory management versus inventory management that is on the back of an envelope.
Okay, first thing is, what you spending what you spending the money to do, right? Because remember, inventory that is dead is actually tied up money for you. That's money that you could have spent elsewhere on the business, salaries, promotion, all kind of other things, right? So the first thing is, you have because you don't know what you're selling and you don't know what's in the warehouse or whatever, you end up having cash tied up. That's one. Two, out of stock, as I said, because again, you don't know, right? You lose sales that way, which will also affect the amount of money that you have, affecting the amount of working capital that you have, right? Then though, you also have the issue of, is just what I call the basic tracking in the business. Worse if you are borrowing money to carry the inventory, because then you even have to charge the inventory interest, because you have the money tied up, you have it as a loan, you're paying interest on the loan, and therefore you carrying that inventory and not knowing it's there is costing you additional money. So there are many ways it negatively impacts working capital. Your ideal inventory system tells you exactly what you need at exactly which point and exactly which levels, so you aren't in this business of creating too much of a buffer, doing too many other things, but you know exactly where things are. Does that make sense?
Makes sense.
Absolutely. So I'm going to talk a little bit about what's in a basic inventory tracking system, right? And these are the things that is basic way to track. One, you need the product identifier, red Prada shoes, which SKU means stock keeping unit. So it identifies exactly what the product is. So that's clear. Then you want to know how much of it we purchased, the quantity we purchased. Again, going back to the shoes, we bought 100 of this type of shoes. What did we pay for it? Remember, we paid differently over time, because we bought some 3 months ago, we bought some 2 months ago, we bought some yesterday. So it could be 3 different prices for different things. But again, we want to be able to track, and possibly the date at which it came into the store, because we can therefore start tracking when we start to lose time and product erosion.
Okay.
How much did we sell? So if we bought 100 and sold 20, we're tracking that. What did we sell it for, right? And then the quantity left behind. We bought 100, we sold 20, we have 80 left behind. So when you go to check, you must find 80, because it's 20 that you sell, or you know that's something wrong if you're not finding 80 shoes. Then you want, what's the value of what you have left? So the 80 shoes times whatever price you pay, that's the value of the inventory that you have. That's how much you're going to be able to hopefully to sell those shoes for. Then you care about the reorder level. Again, the reorder level is, if it's 80 shoes now, at what level do I reorder this particular brand, this particular color? So maybe you say when it gets to 30 or 20, you put in another order for 50. So, you know, based on how long it takes for you to come from China, America, Italy, wherever, you know that if it takes 6 weeks, and how much is and how many you sell each week, then when it hits 20 or 30 or whatever the number is, you call that your reorder level, and you make sure you put in another order. And then, of course, to be able to identify the quantity that's missing. That's if there's pilfering and so on. You try and organize the system and your physical count to make sure that they're aligned.
Okay. So pretty much that is the basic inventory tracking system. And we actually, Cordell Mullings is going to be talking to us about some of the actual IT systems that are available. Sandra Palmer, I see your question about theft. Cordell, I'm going to direct that question to Cordell shortly. Alexander Kuro, just explaining what we do is our co-host is actually setting the stage for the theoretical part of our discussions. And these slides are available on our Instagram page at PSOJ Access to Finance.
And also remember,
in the memo, as well as on the smallbusinessportal.com. So if anybody wants to look back, just so that they have the information at hand. And remember, if you don't have our weekly memo, please email us at sme@psoj.org. So for this section, Nevada, let's just quickly recap. And we've been talking about retailers. I just want to, I'm a restaurant owner. I am at the 19th of November. What are my key considerations at this time?
Okay, so here's how you think about inventory. And I said the restaurant is a good thing. Last year for Christmas, when you had your bar at a restaurant, you had about 50, 100 different type of liquor. That was your standard thing. Because what you wanted to make sure was that even the one person who want apparel, you have it. Now, you can't take a risk to be left with a lot of liquor inventory. So this time, you're going to actually carry far less. So what you do is you look at last Christmas and you say, these are my top 20 liquor. Appleton sell, right? Appleton sell about 3 bottles, whatever. Apparel, not selling too tough. So you concentrate your inventory buying in what you call your high churn, high moving items, because unlike last year, where everybody was coming out and all kind of drinking and stuff was going on, this year, the tail probably won't be there. And I'm not saying you won't get some disappointed customers, but you far more don't want to take the chance to be left with inventory that's going to expire or do badly than it is that you want to for something that's a very low selling item. That's how you need to think very deliberately. Similarly with food, right? You may have 40 things on your menu usually. This time is not for that. What are your fast selling items? And then what you do to keep it fresh? You have 2 or 3 interesting things every day that's different. So you concentrate the special part of your menu. You have some base things that will always sell. And every couple of days, you do 2 or 3 things that you call special introduction, special things. But you don't have the long 40 things that you're trying to sell again. Because again, risking, you have meat that's going to go bad because you're not selling enough.
All right. So Nevada, thank you for that. So we've gone through the basic inventory tracking system. We've looked at the 5 types of inventory, and we've talked about why manage your inventory closely. So Nevada is going to join us again at the end of the show, because right now we are going to be joined by Cordell Mullings, who he is himself an inventory expert and founder and CEO of Attention to Detail Company Limited. So Cordell is the founder and CEO, and this company is a specialized consulting firm that provides inventory management services to small and medium enterprises. He is a passionate and creative visionary with roots deeply entrenched in inventory management, starting with his very first job as a warehouse clerk 16 years ago. He provides services to clients across industries, including wholesale distribution, clothing and accessories, electronics, and even the cannabis industry. His skills and experience have made him the most sought-after inventory professional in Jamaica, attracting the interest of several local manufacturing and distribution giants. Cordell is also an accomplished accountant through the Association of Certified Accountants, and has served at Juicy Patty's of cost and inventory accountant, the Jamaica Pegasus Hotel as cost controller, as well as Kana Therapeutics, where he occupied 3 roles at one time as IT systems administrator, inventory manager, and cost accountant. Before starting his company, which we can all now benefit from, he also served as inventory controller at Lasco Distributors, where he re-engineered several inventory processes that were used as the catalyst to reduce inventory shortages to levels far below existing standards. Cordell, we glad to have you here today.
It's my pleasure to be here, Rochelle. The previous discussion regarding the accounting side of it really provoked me. I'm raring to go.
Yes, I thought it would. And one of the things is that we like to ensure that we're making the connections with the different discussions. So inventory management does not exist on its own. It's related to customer experience. It is a
Yes.
critical component of your financials. So, and you are able to talk very widely about inventory management. We already have some questions. Dave Lee, I see your question. What is the role and space and its cost in inventory management? We'll get to that, Cordell. And I see Stacy and Mullings. Dave is saying, go bro. Always.
Hey, much respect, sis.
So, Cordell, I know I touched in your introduction on what attention to detail is about, but just so that we get just a wider understanding, because I know several of our SMEs are wondering, how can I work with a Cordell? What type of services do you offer? And who do you offer these services to? I know it's small and medium enterprises, but say I have a small dress shop and I would like to get some assistance. I know how to pick dresses. That's what I'm good at. Inventory management, I don't have that kind of training. What does your business offer to me?
Well, we pretty much simplify it and make it easy to manage. From an
Okay.
inventory management standpoint, things can get rather complicated if one tends to ignore certain details and just go ahead and purchase and operate as you normally would. What attention to detail provides is inventory management and control services to businesses that really are not set up necessarily to afford full-time staff in order to manage and control the inventory, mainly for small and medium enterprises. But we also service some large organizations as well. So it really depends on what your needs are and so on. But if you really are running a lean operation and you want a little advice, you want some structure, you want some procedures, you want some type of control measures to ensure that your stock is accurate and so on and so forth, that's where we come in. We provide whatever it is that you need in order to be on the ball.
Okay. So Nevada had gone through why we need to manage our inventory closely. Now, you've
Yes.
worked in several industries with organizations with large inventory. So you've worked
Very.
the manufacturing of items that go on a shelf. You've worked in manufacturing at a juicy patties. I just want
Yes.
to just give us a bit of your perspective when you think of inventory management. This is your master class. What are the key things that you look out for when you're managing inventory or consulting on inventory for a business?
Well, for me, the critical thing is to ensure that whatever inventory management system you're utilizing, it is as closely as possible mirroring what is happening in your physical warehouse space. That is the most important thing. As closely as you can get those two things to match, it
Mhm.
simplifies everything else after that. So yeah, that's where my vision is always focused.
Okay.
Very first thing.
All right. So you go into a warehouse, for example, and me never did I manage my inventory so good. So my warehouse looks chaka chaka.
Oh boy, I know
Yeah.
where this is going.
So this is COVID-19 pandemic time. We're just a few weeks before Christmas. We still have a curfew now of 9 p.m. You got into my warehouse, things are all over the place. What are some of the key things you would be looking for to advise me on? And tell me a little bit about my dead stock and how do I get this stock moving and make decisions for the next couple of weeks?
Well, if your warehouse is disorganized, then the first thing you need to do is pretty much, if you already have an inventory management system in place, what you have to do now is to clearly separate and identify each item or group of items separate from each other. That's the very basic thing. If you can do that, then you can manage to actually have exercise more control and be in a position to dictate how you run your business and direct your purchases in an accurate and efficient manner and so on. So if you have a pile up or a build up of dead stock, then it's pretty simple. You get rid of it.
Mhm.
By any means necessary, you have to get rid of it because, as Nevada said, it really occupies a lot of precious warehouse storage space or shelf space that can be utilized to provide your customers with more useful stuff and provide you with very, very, very important revenue.
Yeah.
So the quicker you can get rid of dead stock, the better. There are various options that are available to you depending on the industry that you're in and the arrangements that you have with your suppliers. The very first one that I would try to exercise, if at all possible, is to seek to return to vendor. If my vendor, my supplier, and I have arrangements that I can return certain goods, and this sometimes is agreed in the contractual stage with your vendor.
Yeah.
You can return a certain volume of stock at a discounted price, albeit a discounted price, but you still get something in return. And you'd want to do this as early as possible. And now during the pandemic is the time that it's most important to identify and weed out all of this dead stock. You do not want it on your shelves. So if, just as Nevada said, if you have to, offer bundle packages, discounts, and also if you may have sales reps, these sales reps can also be, issued, be allotted additional commission in order to, to liquidate these items as quickly as you possibly can. But by, as I said, any means necessary. If you have to dump them or get rid of them, you have to get rid of them. And even there are also PR benefits that can be obtained by donating to charity. These things are also tax deductible from an accounting perspective. You can actually, save tax. Yes, you can also save taxes when you actually, give away stuff. So there are lots of benefits to getting rid of your dead stock.
Okay. Now, the inventory considerations, and we touched on this before, there are different inventory considerations for different types of business. So we would have gone through a manufacturing set of the different types of inventory. But in terms of just the general considerations of retail versus, for example, restaurants or grocery stores, what are some of the key differentials in the inventory considerations?
Well, the restaurants tend to be more, if it's a medium to large restaurant, they tend to be more similar to manufacturers because they have what you call recipes. You normally use your ingredients, and these ingredients, become the dishes and whatever it is that you serve to the customers. So there's a process to convert raw materials to finished goods. So it would be more similar to that. And of course, you'd want a software that has these capabilities in order to ensure that you can account for your inventory in an accurate and efficient manner. A distributor is pretty much buying and selling, so it's a little bit simpler and more straightforward. And if you're a wholesaler, retailer, or distributor, then this process itself is a bit easier to operate, and of course a bit cheaper. So those are the the different considerations that one must have if you're gonna be running any of these types of businesses. So
Cardell, every minute you talk about software. We know that some of our people, the software, Excel spreadsheet, or we have one big book where we write down the information in, and we cross out, and we say we did have 5, we sell 1, and now we have 4. And for some of our restaurateurs, that when we're coming up with our recipes, and so we put a little dash of this, a little dash of that. In terms of software management, what kind of software management is available, and should we really be considering software management as an appropriate way for inventory management?
Again, it all comes down to the nature and the size of your business. If you're a small restaurant or a corner shop, a little grocery store, then it may not be necessary to acquire an inventory management package. You can actually be more of an of assistance to you. But if you want to be in control and be knowledgeable as to what exactly your stock on hand is, if you have a larger business and so on, then I would advise you get an inventory management package, especially if you're one of those persons that is not actively involved in the business directly and doing every single function yourself. Then you have other hands in the pot, so to speak, and you really can't control everybody's actions, and even yourself, you make certain mistakes that you'd be surprised. You'd be surprised. So I would implore you to employ a decent software solution to manage your inventory as I said, in a very efficient and effective manner. So that's where my head is regards to that.
Some of the basic software that is available. Can I just use QuickBooks?
I would not recommend QuickBooks if you're going to be managing your inventory, because QuickBooks is an accounting package, and what these accounting packages do, they sometimes offer an inventory module that is not necessarily very flexible and can cater to the needs of for a restaurant, for argument's sake. They're too wide open. They lack certain controls, and they're just very rigid. They're really, really accounting based and don't provide the flexibility that you require to run a business. I would recommend a decent point of sale system that allows the inventory management flexibility and the configuration that can really, really sit down on top of your business and mirror your operations as closely as possible. So QuickBooks, it can be utilized. I'm not saying it can't be utilized, but personally, I wouldn't recommend it based on the experience that I've had over the years working with packages such as QuickBooks. However, here's the advantage. Someone utilizing QuickBooks, they may be able to complete their accounts in a more efficient or more quickly and so on, more straightforward. The accountant may be biased towards that. But what I would counter that with is some of these software, these POS, point of sale softwares, they can be, you can actually customize certain reports that facilitate simple accounting because the accounting side is not very complicated.
Okay.
It's just double entries. You debit this, credit that. You know how easy it is.
Yes. Here, yes, we know easy. Thanks for that. Both confidence. So
yes.
Poll running, and one of the questions is: have you ever lost inventory due to theft? 50% of our respondents say yes, and 50% say no. And this brings us to a question that was asked earlier by Sandra Palmer, and she says it's very difficult to manage loss due to theft. What are some of the key ways that a small business owner can best handle this?
I would recommend what is called referred to as a perpetual inventory management count program, cycle counts. And what this aims to do is to pretty much provide you with an audit or a comparison between what is physical in your warehouse or storage space compared to what you're supposed to have, right? And this is where the software comes into play. Now, you won't necessarily be able to count every single thing all the time. It's not a practical expectation. So what I would recommend, especially if you're a small or medium-sized enterprise, you need to establish what I would call different classifications of inventory. Normally what they call it is ABC categorization. Essentially what that is you break it up into segments of priority, whether fast moving, high value, and so on. These items that are sensitive, if you lose one or two of them, it's a big deal. Or these items are very, very fast sellers, and you really can't afford to be losing any of them because they contribute the most value to your bottom line. And you would select a heavy proportion of fast moving and high valued items, and you'd count them more regularly, and a lower proportion of low value and slow moving items. But eventually you want to cover at least the entire inventory system within a full year. This also can actually replace the shutdown, so to speak, to do a full stock taking, which can be at times, as I said, very, very tedious, very, very costly and time consuming. And if not executed efficiently, it can actually cause more harm than good to your inventory system and your business.
Okay, because we're going to get to stock taking, and I want to just take another question. And please don't forget to ask your questions. We're looking forward to your questions. We have an inventory expert with us, Cordell Mullings, who is CEO of Attention to Detail. Don't waste the opportunity. Dave Lee, what is the role of space and its cost in inventory management? Because we were talking earlier too about how we deal with dead stock. What is the role of even space on our shelves and the cost in inventory management?
Well, there are multiple layers to that. The cost of space. If you're renting warehouse space, the space, the cost is going to be dependent on how much space you're occupying. So right then and there, that can be a huge cost. A lot of businesses don't necessarily have access to this whole ton of warehouse space or shelf space, so to speak. So you want to, especially during these times, in the COVID times and so on, you can really operate as narrow as you possibly can and save a lot of money on rented space and so on. These can be used to renegotiate rental arrangements or lease agreements with your landlords and so on, and trying to consolidate your business as tightly as you possibly can. So space, it plays a critical role in managing your inventory costs and so on. As I said, that's the cost accountant side of me again. You just triggered it off.
Yes, but you do wear many hats. Dr. Smith actually asked, can Cordell please share his views on the reliability and effectiveness of just-in-time systems from an MSC point of view, seeing that many businesses are looking towards reducing brick and mortar operations and moving towards more online transactions and e-commerce? Great question, Dr. Smith.
Well, there are pros and cons to just-in-time. You can actually minimize your own inventory, storage costs, and so on, but at the same time you may be more sensitive to stockouts, because if your business is reliant on having adequate stock available to walk-in clients and so on that you really can't predict, it's going to be very difficult to be calling up your supplier 24/7, say give me a delivery of such and such and so on a regular basis. So it really has to be catered to the specific business sector or the nature of the business that you're actually in. So yeah, you really have to evaluate what your needs are and what your restraints are.
Yeah,
what
and
your customer buying patterns are and so on. Sorry.
So attention to detail is a company that can actually assist our MSMEs in determining what is the best system to use.
Without a doubt. There's a step-by-step process that you have to go through in determining what system it is that you would like to that is best for you.
Okay. So one of the things is that we are talking about inventory management for this Christmas period, an unprecedented time for us globally.
Yes.
How does a small business best plan and prepare their stock purchases for this particular time?
Well, to keep it simple, I would stick to the facts. I would look at the sales trend since the onset of the pandemic. Look at what is selling and what is not selling, and try to narrow down your inventory as best as you possibly can. As I always keep saying, you need to get rid of the obsolete stock. It's something that I really have to emphasize, because a lot of business owners, we have this affection towards our stock even when it dies. It's like elephants when they sniff the bones of their dead relatives. They can't seem to let go because they're such emotional creatures. And it's the same with a lot of business owners. Even if the stock is not adding value, we really tend to be emotionally tied to it and can't seem to get over getting rid of it, so to speak.
Yeah.
So for argument's sake, if you're in the cosmetic business or selling stuff for party goers, this season there may be a significant impact on the party scene. So if you normally purchase a lot of hair extensions for the Christmas season, then you may want to reduce that. You may want to be prudent and concentrate that cash elsewhere, because you may find it difficult to sell as you normally would.
Or just hold on to that cash, because cash
Exactly.
All right.
Yes.
On that point of elephants and their dead relatives, we asked a poll question: do you have more dead stock than usual this year? 25% of our respondents said yes, and 75% said no. So it seems like people are getting rid of their dead stock.
I would hope so.
Yes. So we talked a lot about stock taking, and you've intimated that stock taking is let's be careful how we do it, when we do it. What advice would you give in regard to stock taking, and how best do we conduct effective stock taking?
Well, this is an area that I'm really passionate about, because this is probably where I made my name. Now, as much as I'm really good at managing stock taking exercises and so on, if you don't have to do a shutdown stock taking, I would advise you not to do so. The method that I prescribed earlier with the perpetual count program or cycle count program, it can be very effective if administered properly. Now, as I said, the aim is to cover the entire inventory at least once per year, but the fast moving and high value items, this is where the 80-20 principle comes into play, and it applies even to inventory, because 20% of your goods are going to be giving you 80% of your revenue, are very close thereabout. Now that 20%, you want to focus as much emphasis on that as you possibly can. because that's where you're going to be getting your revenue and your profit from. If you waste a lot of time, tie up a lot of time into these non-value adding products and managing and controlling and counting and recounting and so on, a stack of envelopes and thumbtacks and so on and so forth. Not that they're not important, don't get me wrong, but you really want to be focusing on the products that are giving you the most revenue and the most contribution to your profit as you possibly can. So I would say, in order to save money, focus on the 80-20 principle and the perpetual count program as much as you possibly can, and try and avoid shutting down your business and counting your stock, for days and then messing up your inventory system at the end of all of that. Because there are a lot of inventory counts, I can tell you from experience, they do more harm than good to your system, particularly if your system requires purging. Because a lot of the times, depending on the business that you're in, if you have a lot of SKUs, your system needs to be purged periodically, because it accumulates a lot of redundant and inaccurate data that can really mess up even your purchasing. So we really must be keen on that. That's a whole other discussion. I could go on and on about that one.
The key, though, is that we want to remain nimble with our management of stock. So we shouldn't be in a position where we actually have absolutely no idea what we have. So that perpetual counting, managing to know that that your systems are mirroring. However, whatever you say you have for sale, those are the things that are in fact available. And when they are sold, especially too, that we're doing deliveries, we're doing in-store, we're doing online, managing to make sure that the 3 blouses where we did have that were sold online, that you tell the people to come for, somebody has taken them off the shelves because they're no longer available. Roxanne West loved that point on the stock taking, Cordell.
Just a quick pointer regarding the stock taking. I can share an experience with it that happened just this past week with a client. Now, we did our weekly spot check, and we counted a particular set of items as we normally do. One of the items returned an adverse or a shortage based on the count and the comparison to the system. Now, when we started to investigate this matter, we decided to review the camera footage or the surveillance system footage, because the item was received just a couple of days prior. So it was pretty simple. When we reviewed the camera footage, it revealed that there was a delivery of 3 cases just 2 days prior. And the delivery man only dropped off 1 case, and the recipient signed for all 3 on the invoice. So the supplier would have been able to, pretty much hold on to that additional revenue, despite the fact that they didn't hand over the goods. Had it not been for the perpetual count program, as well as the surveillance system that was able to capture the footage and resubmit it to the supplier as proof that the goods were indeed not delivered. And, this is where it's just one example of where, things can go wrong. And that's what I call a critical control point in inventory management. When you're receiving your goods, you really ought to implement as much controls as you possibly can at that point. You don't want to be, conducting business as usual at that point, because if it comes in incorrectly, it's forever incorrect. And it's very difficult to pick up.
And it's very difficult to pick up.
Very difficult. A lot of the times you can put blame all over the place, and it just was never received in the correct manner at all.
And we're seeing Jana. Hi, Jana. Great to have you on again. Jana, your question. Could you, Cordell, and Cordell, you notice everybody know, so we refer you to everybody that call you Cordell. Could you explain the concept of drop shipment for retailers and its benefits and any cautionary tales?
Well, drop ship is really a far more efficient way of delivering, or all right, let's put it this way. When you drop ship, you really don't incur any storage costs. So what you do is,
by the way, for those of us who don't know what that is.
A drop shipment is an arrangement whereby your supplier delivers straight to your customer. So the goods don't move physically through you or your warehouse space or so on. So you purchase from a supplier in China or so on, and or your customer wants an item, and your supplier is in China, and the customer is in, say, Australia. You can pretty much be the middleman and agree to, have the supplier do the drop shipment to the customer in Australia, and you just conduct the financial transaction, and, pretty much incur no additional storage or shipping costs and so on. And very little risk as well.
So, John, I hope that answered your question. And for those of us who didn't know what drop shipment was, we would have also gotten the benefit of an additional lesson by Cordell Mullins. And we're joined by Cordell Mullins, who is CEO of Attention to Detail, which is an inventory management. Well, Cordell is actually a man who wears many hats. So he is
Yes.
a consultant, and one of his expertise areas is inventory management. Now,
That's a core.
that is core. Cordell, of course, the polls are running hot. Question: do you use an electronic system to keep track of your inventory? 50% of our respondents say yes, and 50% say no. Omar Hutchinson actually comments here, perpetual counts are very important. It is also more effective when these counts are random and unscheduled.
Yes, yes. Big up Omar. Smart
So,
man.
Cordell, what's your top advice for small businesses to manage their inventory during COVID while their sales are already impacted by its effects? And I'm asking this question also in the context of speaking to a small business owner recently, and their fear was, if I get rid of these items and I am not constantly restocking, even things that not selling, it going look like nothing now going for the business because the shelves will be empty.
It simply means you need to get stuff that is selling. So you need data. That's why the point of sale systems are so important, because they actually give you the real solid information as to what is actually being sold and what is not. They tell you how long your items are remaining in stock before you offload them to customers and so on. And if you don't have it, then you have to rely really on, memory and, your top
Yeah.
sales reps, people that know the sales a bit, and that can be a bit fickle and unreliable. So I would recommend the larger your business is, the more you'd want to invest in some type of point of sale or inventory management system, because you need that data when you're making business decisions. It's very, very important. I can't stress it enough. Um, for the small business, in addition to that, I would say, addition to getting rid of the dead stock and so on, you plan your purchases based on demand.
Yeah.
And if you're gonna estimate demand, if you can't do it by yourself, you can actually meet with other business owners in the same industry. You can conduct customer feedback exercises and so on, just to get that real accurate information as to what it is that the customers really want. And
Mhm.
if you can stay ahead of your competitors and actually be in a position to really estimate exactly what it is that the customer wants, when they want it, the buying patterns and so on and so forth, then you're really giving yourself a good chance to not only survive the pandemic but to actually excel.
Yeah.
As I mentioned in the scenario earlier regarding the surveillance system, I'll also implore you to invest in a surveillance system. It can be very important for several reasons. It
Mhm.
picks up a lot of mistakes. It picks up theft if if actually you pay keen attention, and can be used to effectively control your inventory and so on. Because when you get rid of all of that dead stock and you have all of this stock in house now that a lot of people want, everybody wants this stuff, they really want it.
Yeah.
And they'll get their hands on it if they see the opportunity. And you really
Exactly.
have to take additional measures now to ensure that you protect it, because one of the worst things as a business owner is to be purchasing stock, paying staff, and then the same one can steal from you, or a customer walks in and steals from you and so on. You really want to keep it as tight as you possibly can and prevent theft. It's very disheartening, and I
Oh,
wouldn't want to wish that on anybody. you
yeah.
know as a bonus tip also, I would say train your staff, because as I said, the same scenario, if that staff member had been thorough in checking or been educated enough to check the physical goods before receiving and so on, then the scenario likely would have not occurred and there wouldn't have been a variance. Fortunately, however, attention to detail was there to pick up on the issue
Yeah.
and restore the goods in short order.
Yeah. And I see Leanne Spence actually is asking the question, what point of sale systems do you recommend for retail slash distributor businesses?
As I said earlier, there are several options out there available to you. I would say for retailers, distributors, NetSuite is a good package. Depends on your budget, of course. There are packages such as Counterpoint POS, point of sale, which is another good one. And there are also a lot of local providers that are now stepping up to the plate. You really have to do your homework with them, though, first of all, and be prudent in making that decision. But they're out there. A lot of them actually provide solid packages with really, really good support, and they are able, more so than the overseas suppliers now, to actually provide with the relevant support that you need. So I would love to say support the local businesses, and support yourself in the process.
Yeah,
just
and in supporting local businesses too, attention to detail is one of our local businesses or local consultants, because sometimes we think we have to go far to find expertise, and we have it right here in Jamaica. Before we even take any more questions, I want to ensure that our viewers know how to find attention to detail. Can you just let us know your contact details so that we can put it in the chat?
All right, you can find us our website at www.attentiontodetailja.com, or you can DM me at our Instagram page at Inventory Expert, Cardell Mullins Inventory Expert.
Okay.
Or you can contact us by phone at 876-449-1834.
Yes. So for all of our business owners, this is a kind of investment that we do have to look into, because inventory management is so key to the financials at the end of the day. And can provide us that end-to-end service. And Cardell, you're generating a lot of interest. Jana says, in school, accounting in particular, we learned about first in. I was wondering when this was going to come, first out and last in, first out. But in the business world, which policy is more practical to manage inventory?
I would say first in, first out is the most logical flow, especially if you're dealing with products that have expiration dates that are perishable. You ideally want to get rid of the goods that came in earliest first. That's a logical flow. And you have even stacking mechanisms for your warehouse or your shelving that facilitate that. If you notice, some of the refrigerators that you have that store chilled beverages and so on, they're designed with a slope. So you pack from the back and it slides downwards. What that means is you're always going to be pulling the first one off the shelf, or the earliest one in off the shelf, right? And that's the principle with which you want to arrange your warehouse and your inventory systems as much as you possibly can. So that's a critical era. FIFO, as I said, is actually the most logical, most sensible way to manage your inventory. LIFO is last in, first out, and it's more financial based than anything else. It's really just how you account for the inventory from a financial reporting perspective. And just to add to what yourself and Nevada mentioned earlier, you see, if your inventory is incorrect as a business that is heavily invested in inventory, once your inventory is incorrect, your financial statements are incorrect. And the objective of presenting financial statements is to present a true and fair view of your financial performance over a period of time. And the inventory is going to be the biggest item on your balance sheet, likely. It's going to be the largest contributor to your cost of sales. It's going to be the biggest payment item on in your payables, and it's also likely to be your biggest receivable if you sell on credit or cash. It's going to represent all of these things. So, and it's also, from a cash flow perspective, it's going to be taking up a lot of your working capital. So if you don't effectively manage your inventory, what are you really doing? You can ask yourself that.
Yes. So inventory is I've heard back in the day an accounting teacher said it's hot cash. And
it's cash. Pallets of cash.
It's cash. Shelly, and I see that comment. Shop from the back of the shelf for fresher goods. Miranda Sim says, very informative, learned a lot. Thanks, Cardell.
Hey, thanks, Mary.
And Roxanne says, my experience, when the customer demands something, when you get the goods, the customers seem to have changed their minds. In a situation, and I just want you to just touch on this question, because I know some of our business owners who are doing online sales to people will DM them and say, I want that blouse, or I'm coming to get that now, and they may save it for the person. Any little tips on how you manage this kind of relationship, especially in this e-commerce online world?
Sorry, I just want a little bit of context with that one. You just elaborate a little bit more.
So
or at least repeat.
yes, so Roxanne is asking, when the customer makes a demand, you get the goods for the customer, and then the customer changes their minds.
Ooh.
And this is particularly prevalent in this online world that we're living in, because people will send a DM to your Instagram page, say them want the thing, and you're still waiting 5 days later, and a couple of people came in. How do you manage this? Do you take
It's
pre?
actually exactly. It's very straightforward. You don't secure unless you get a down payment or the goods are actually paid for in full. Because if you don't cover your costs, then you're really putting yourself behind the eight ball. Additionally, you can also arrange with your suppliers to have that level of flexibility where you can return goods if the customers don't need it and so on.
Yeah.
So if you're just in time and you don't have that type of relationship with the supplier and so on, this can be very dangerous for you. So you would at least want to ensure that you secure payment prior to.
Yeah, and I see some answers were coming in. Jana said required for everybody bright. Um,
Very bright.
so we'll take one last question from Christopher Burrell. Cordell, what's your suggestion for keeping different systems like POS and inventory databases synchronized in the business to keep things as accurate as possible?
Well, that's a really good question. I'm loving that question because one of the major issues with a lot of businesses is that when they start out, they tend to not select packages that are scalable to the changes in the business size and so on, and the fragmentation that often takes place. So what happens is they tend to have different packages conducting different functions here and there and everywhere, and to have them integrate in a seamless manner and actually present meaningful financial statements can be very difficult. So I would recommend that you select a package that is scalable from the beginning.
Mhm.
If not, select a package that you can easily migrate that data from that database to a more flexible package later on. So
Yeah.
you don't want to invest in something that is going to hold on to your data and not be able to transfer to an upgraded system at a later date. And also, you really want to be invested in something that is scalable.
Yes. Thank you for that, Cordell. Wow, Cordell, you really have just dropped so many important tips for us tonight. And for those of our viewers who are like, I didn't get to catch everything, is there any material on this? Cordell has provided a very extensive it's very extensive information in this week's memo. So email us at sme@psoj.org. And if you say to yourself, how come I didn't know about Cordell before and I need to be getting in touch with Attention to Detail, the CEO of Attention to Detail, Cordell can be reached at 876-449-1834 or visit their website at attentiontodetailja.com. For those of us who love to jump on Instagram and check for things, it's Cordell Mullings at Attention to Detail.
No, it's inventory expert.
Inventory expert. So please, and right now I would just go start following him on Instagram.
Yes, and you can also find me on LinkedIn, Cordell Mullins, Modern Inventory Expert.
Thanks so much, Cordell. And Cordell again is the CEO of Attention to Detail, a company that that consults on inventory management. We have that right here in Jamaica. But again, we encourage you, we all learn in different ways. We have smallbusinessportal.com. You can rewatch this episode. All our memos are available. This week's memo cannot be missed. And there's also a reference guide that is provided. So we're going to wrap up tonight because I always like to hear when Nevada is on, we always bring him back for a wrap up and his views because we are talking about managing your inventory this Christmas. You look very pleased, Nevada.
No, what a fantastic show, Rochelle. Sometimes when we get a show, you say inventory, Lord. Nobody, but so much valuable information that if this has been a problem that has plagued you tonight, you probably learned a lot. We hear from Cordell, right? If your inventory is correct, your financial statements are likely incorrect, which means you don't have good visibility into the business, right? Other critical things, the order to sales cycle time. How long does it take from the moment you order for it to be sitting on your shelf? And how long is it when it's sitting on your shelf, does it move off your shelf outside? a critical part of what the inventory management system can do. The inventory cost is not just how much you pay for the inventory. You're paying for storage.
Yes.
You're paying if it's stock out. You're paying if it's dead stock and you get the money back. And you're ordering and so on. So remember, the cost of your inventory is not only what you paid for it, right? You got to understand when and how much to reorder. To make sure you don't have out of stock. Another critical thing that we talked about, right? When to discount and clear the dead stock or give it away. Charity, he said, charity gets a lot of good PR. That also is good, right? And especially for Christmas now, concentrate your inventory on the stuff that's likely to sell. Yes. Disperse with stuff that is the slow moving items. Align your physical count with the system count. We learned tonight about a thing called perpetual inventory management, where you keep checking to make sure what the system say and what the physical count say is aligned. And in fact, we heard from one of our attendees that the best thing to do is make it unscheduled and surprise. So nobody knows. It's not a thing you do every Tuesday, but this week is Tuesday, next week is Wednesday, another week is Friday. So nobody knows when it's coming, right? We learn about that. Perpetual inventory management. When you do your system to align the system, the software system with the physical. We talked about first in, first out management, inventory management system. So the goods that come in last, stick them to the back. Now we had one of our guests thought she had a trick the system. So she's going to pull the thing from the back. But apart from that, what they're trying to do, which makes sense, you want to keep the old inventory moving. We learned about drop shipment, where you can work with your supplier that you never actually have to take physical hold of the inventory. Just let them send it directly to your customer, incur any of those costs one time. We're talking about the 80-20 rule in terms of the concentration of your sales. 20% of your inventory likely accounts for 80% of your revenue. That is the thing you must focus on and making sure you're churning for Christmas. He gave us some recommendations on some good software, NetSuite, Counterpoint. Make sure you do your reviews, read up customer reviews, find people who are using it, what has worked for them, what hasn't worked for them. And we talked about when the customer makes an order, because they don't get an order.
Exactly.
How do we make sure they honor that commitment? Some people say, make sure you get a deposit. You've got a small one, and ensure that the person coming. And if somebody's not willing to give you a deposit, I know you're afraid of losing the business, but understand you really didn't have that business, right? Because if they're not willing to come and give you a deposit or give you a credit card to hold, them just jerking your chain and when it's coming.
Yeah, pretty much we just did a degree in 40 minutes on inventory management. And before we get to the critical things to understand, I see, thank you very much for your comments. Denise Cox, and I have to mention, she says, great job, son. Always good when you say,
nice.
They're representing. And Kenny Fairman says, this one, you're nice like chicken back and dumpling. I will add the curry chicken back and dumpling. Who thought inventory management? Because, Nevada, thank you very much for just pulling together just the entire raft of what was discussed. And again, what are the critical things to understand? Can we get that slide so that
all right, just pull up a slide for me. Pull up that last slide. Sorry. Okay.
Take a picture of it.
Yes. All right. The order to sales cycle, how long it takes you to order for it to be sitting on your shelf. How long is it sitting on your shelf until it's out the door? Your inventory costs are not just what you pay for the goods. There's holding, there's stock out issues, there's storage, there's expiring and dead stock. So all of that has to be taken into account. When and how much do you need to reorder? So again, you minimize your stock out, especially for your fast churning items, your fast moving items. When to discount and clear dead stock. Things from last year Christmas should not still be in your retail store. Time to get rid of them. And if you can't get rid of them by getting paid for it, certainly give it away or bundle. Send it to your best customers, right? And remember, you can also use that stock, deep discount it to get people in. They'll often buy other things while they're there. Aligning your physical count with the system count. What did we learn? Perpetual inventory management. And then first in, first out inventory management. So always try to be moving the items that came in first. So your fresh items, put them towards the back on your shelf.
Yeah. And thank you very much for that slide, Nevada. And I know some people are like, but I didn't catch a slide. Where am I going to find this information? Again, please visit our Facebook page right here, PSOJ Access to Finance. Also, smallbusinessportal.com. All our previous episodes are available, as well as all our memos. All of these slides are available. They are available to you, provided by the PSOJ, because we are going to succeed and thrive through COVID. And however we can help, we are here. Email us at sme@psoj.org. We're right here. If this is your first time joining us, we are here every Thursday at 7:30 p.m. and we have been here since March. So we are at episode 33. So you missed enough episode. If you're joining us for the first time, please binge watch. Nevada.
Yes.
What a rich episode. As you say, who thought inventory management?
But fantastic and critical. Very, very critical. Again, what is it that we keep harping on, Rochelle? You must have visibility into your business. You must have visibility into your business. So that is part of what we're trying to make sure that you see. And inventory is one of those things where, again, as Cordell said, it's probably one of your most critical items in your financial statements. So if you don't know what's going on there, you don't know what's going on in your financial statements at all. Really, really fantastic. Cordell, thank you so much for this. And this kind of support is exactly what SMEs need.
Yes. And as Nevada said, you must have visibility of your business. If you're wondering if we've had other experts on, every week we have experts just like Cordell, who have been sharing with us. For those of you who are grappling now with your financial statements, we actually did 2 episodes on financial statements. You can go back to these episodes and also match it along with this episode on managing your inventory. Visibility of your business. Know your business. Keep track of your business. We are here for you. Nevada, thank you again for joining us for the, always like the little theory behind it and the way that you will put it together for us. So we're joined again by Nevada Powell, lead architect, PSOJ AFFP project. Thank you again for joining us. Thank you for your comments and your feedback. Please do not keep this video to yourself.
Spread it.
Comment. Give your feedback, because we're all coming out of this stronger. So see you again next week for another episode of COVIDCASTJA. Visit us at smallbusinessportal.com and please email us at sme@psoj.org. What good?
Thank you.
So you have a great idea to start a business, but you don't know where to start. We completely understand. You have a lot of questions and almost no answers. Smallbusinessportal.com is here to help. At smallbusinessportal.com, you gain access to information on loans, grants, and investment opportunities from verified financial institutions. Guess what you also get? Useful business tips, access to training. All these services combine to make your business idea into a reality. Start your journey today at smallbusinessportal.com.